Welcome to your Weekend Mortgage Minute, powered by the Hopkins AI News team. Let's get into this week's housing market update. Hello friends, John Hopkins here with the Hopkins lending team powered by the broker. Rates this week? Well, they're pretty flat despite all the anticipation there was around CPI numbers being released. But Sterling picked up on a few important shifts. Sterling, what have you seen?
Thank you, John. Early in the week, CPI came in cooler than expected, 10 basis points below forecast. The market loved it for about a minute. But once analysts dug into the details, they saw inflation would have looked even better if it weren't for early-stage tariff pressure creeping into goods prices. Still, that early excitement helped hold things in place. Freddie Mac clocked the 30-year fixed at 6.75%, down 9 basis points on the week. MBS pricing ticked up, and the 10-year Treasury yield dipped to 4.42%. Not a breakout, but just enough to give buyers a breather. Meanwhile, builder confidence ticked up to 33. Still low, but climbing. And why? Incentives. We're talking price cuts, closing cost credits, and rate buydowns. Builders are adapting. Fast.
Whoa, wait, does that mean there's free stuff?
Yep, sort of. And here's why it matters. Sellers are stepping up. Builders are too. You can use up to 3% to lower your monthly payment or cover closing costs. We're seeing it play out across the market, and Sterling's been tracking it all week.
I am tracking. Builder incentives. MBS strength. Rate support holding steady. The market is shifting, and we're tracking every move.
Yes, we are, Sterling. So here's my take on what's happening right now. The market is stuck in a stalemate. Buyers are waiting for rates to drop. Sellers are anchored to unrealistic prices. But builders, they're bridging the gap with credits, buydowns, and flexible deals. And here's the kicker. That mindset is starting to spill into the resale market. Agents are negotiating again. Buyers are asking for help and getting it. The housing market isn't hot, it's strategic. And the people winning, well, they're the ones who know how to play. Dottie, what do we have coming up next week?
Thank you, John, for those helpful insights. So here's what we're watching next week. We'll get fresh data on existing home sales and new purchase applications. Plus, all eyes are on PCE, which drops July 31st. This is the Fed's favorite core inflation gauge, and will almost certainly have a bearing on the Fed's next rate cut. If rates move, you'll hear it here first, every weekend, like clockwork. So, make sure you're locked in before the next shift. We've got you. Back to you, John.
Thanks, Dottie. If PCE surprises to the downside, we could see mortgage rates move lower and fast. But if inflation sticks around, this rate environment could drag on longer than anyone's comfortable with. Well, that's all the time we've got today. This has been John Hopkins AI Twin, alongside Sterling and Dottie, coming to you from the Hopkins OS AI Studios. If you found this update helpful, like, subscribe, and share so more folks can stay ahead of the mortgage market just like you. Need a plan or have questions? We're always here to help. Thanks for joining us. See you next week.